Hey, Bulls and Bears, what is happening? Back with another dose of economic reality. My name is JJ. You're watching Bull, Boom, Bear, Bust as usual. We have a lot of financial economic news to get into, and our world is changing right before our very eyes. And in many of our lifetimes, we're going to see an entirely changed and revamped and reformed financial system. And we're at the beginnings right now of the banking crisis 2.0, or what many are calling financial crisis 2.0. We've got a lot of news to get into, but I just wanted to start off with that. So it's very interesting now to see things coming to fruition that we've been talking about here for years. We've spoken about here for years how the banks are technically insolvent. They don't have the money that is deposited into those institutions. Once you deposit it, it's loaned out. It's fractional reserve. It's sent out in the form of loans. It's invested into securities. And the banks are in trouble now in a multitude of ways. One, we have the run on deposits because people have no confidence now, or many people don't have any confidence in the banks right now. But two, we also have the declining values of the bank's assets. And as you know, banks tend to bundle up their loans into securities. Some they hold, some they sell. And that's where you see the buyer and lender of last resort out there buying up a lot of these loans to keep the banks propped up and what's called liquefied, or to keep liquidity into the system. Because if they get too bogged down with a bunch of bad loans on their books, then they're not going to be able to make more loans. So that's the scheme that's been going on here. This lending and people taking on record amounts of debt is what we're seeing right now, has kept this illusion of a booming economy, rolling for quite a long time here. And I said 2008 was just a warm up. I've heard that said, out there, that 2008 is a warm up. It just took so long to get to this next financial crisis. But look at all the additional debt we've accumulated since then. And think where things would be right now if it weren't for all of the debt. Our lives would be drastically different. And people somehow think that the U.S. is immune to the economic crises that we've seen in many other countries around the world. They think we're immune to hyperinflation or massive inflation. They think we're somehow better here in the U.S. Well, a lot of that comes down to the dollar being the world reserve currency. But don't think that you're better because you were born in the United States, right? So, do you think you're better than someone that's born here in San Diego, better than someone born in Tijuana? Or do you think you're better in Detroit because you were born in Detroit versus someone born in Canada? I mean, it's not that we're smarter people here in the United States. In fact, if you look, we have some of the lowest test scores here when you look at a global comparison to the United States. We're not that smart. We've had the luxury of these dollars that can be created out of thin air, and that's given us a pretty high standard of living. We've had the ability to borrow money, borrowing money, and then the boom that happens afterwards creates asset bubbles, and people that time these bubbles, buy low, sell high, can do pretty well in this system. But most people are not savvy enough to know exactly when the booms and busts are happening. And even myself, I don't know the exact timing because things have played out here a lot longer than even I expected. And even people out there that have been watching this, even economists that have been around for decades, still don't know exactly what's happening. So we try to look at what a lot of people are saying, and people that we all know, CEOs, of course, the economists out there, people out of the central bank. But here's what Jamie Dimon is out here saying now. And, I don't take a lot of account in what CEOs say, especially CEOs at a too big to fail bank, right? So if your bank's too big to fail, you could be a complete bonehead moron and still be a successful CEO at a mega bank, because no matter what you do, no matter how many mistakes you make, no matter how many loans you give out and people don't repay those loans, if you're too big to fail, you're going to be propped up. So at the end of the day, you're going to look like a genius when you can actually be, one of the three stooges can run these big mega banks right now, and they're always going to be propped up here. But Jamie Dimon's out there saying the following: banking crisis has increased the odds of a recession. JP Morgan CEO Jamie Dimon. Wow. We needed a multi-billionaire to tell us that. Like we didn't already know that, and we didn't already know years ago that this banking crisis was going to hit. Right? We didn't know exactly when, but we know that the entire scheme is insolvent. This scheme of loaning out money that they don't have, creating money out of thin air, creating asset bubbles to make people think that the economy is booming. Right? How many jobs were created because of the? Let's just talk about the housing bubble. How many jobs were created because of that? All of the lending, people buying homes they can't afford normally. Most people go out, get a mortgage. Also, when it comes to rising home prices, look at how many big money investors bought homes, and that made the price, go up even faster. In California, only about 50% of the people here own their homes because so many people are priced out, and it's becoming so bad now that people can't even afford rents. That's why we had to have all these rescues back in 2020, and some cities now, even to this day, as I speak, are still having these renter protections in place because they know that their entire city would look like a one big homeless camp if they let them expire. So that's just one of many examples of how this economy is really an illusion, and people can't really see through it for the most part unless you dig into the information that we try to dig in here on this channel. But let's get into some other news here. Banks are really hurting right now with deposit outflows. U.S. bank lending slumps by most on record in the final weeks in March. The most on record, that means worse than a financial crisis, 2008, 2009. So with the deposit outflows, these banks are growing very concerned about their loan portfolio and what they have on their books and who they're loaning money to. This is out of Bloomberg here. U.S. banks contracted by the most on record in the last 2 weeks of March, indicating tightening of credit conditions in the wake of several high-profile bank collapses, risks damaging the economy. Well, I think the risk is already it's already here. It's already happening. So will there be some sort of statement that comes out of the FDIC, maybe great Aunt Yellen, and she'll say, we're going to back every bank, no matter what the depositors have, over 250,000 and beyond, unlimited, right? She could come out and say something like that, and that could really reverse this whole thing where banks are being strict on their lending. Once they hear something like that, they may just go ahead and start lending like crazy. We already know that the banks are leveraged with fractional reserve. For every dollar they have, they can loan out hundreds of millions of dollars. And it's infinity now because the requirement is zero ever since 2020. We had that emergency rescue scheme that was put out in 2020 to keep the banks functional, and they knew that people were, going to be running out of money. So as far as the banks being able to loan money, when people are running out of money and the deposits are dropping because the savings rate's been plunging, they knew that the banks had to be completely unleashed from any sort of ceiling or limit on how much they can loan out. This whole debacle that started with the bank crisis here just a few weeks ago kind of flipped everything on its side, and the banks, were left with a lot of unanswered questions, and that's why you see this big drop off. But that could be reversed in one meeting or one announcement, so we'll see how that goes. Next, commercial real estate is headed for a crisis worse than 2008. That's Morgan Stanley saying that. In February, PIMCO-owned office landlord defaulted on an adjustable rate mortgage. People thought the adjustable rate mortgages were done after 2008 because we saw the disaster that came out of that. 7 office buildings in California, some in New York and New Jersey, when monthly payments rose to higher interest rates. You see, no one ever accounted for higher interest rates because no one ever thought that inflation would become such a problem. But in a country where you don't manufacture hardly anything, where most items are imported and shipped in from countries with lower cost of living, people never accounted for rising interest rates because they never thought inflation could happen here. Well, it happened. Rates are higher, and now we're paying the piper here. So things are about ready to get a lot more real. And there's articles out there saying how we've been rescued, or about how the crisis has been avoided because the bank runs are slowing down. That couldn't be farther from the truth. We're just getting started. I've said here before, I think we're in the first, maybe the second inning of this crisis playing out here. Let's talk about de-dollarization here. That's going to be an inflationary force once more countries start dumping the dollar. This is out of the Organic Prepper, a very cool website here. A lot of great information and analysis here. Here's their headline. While everyone is distracted, the dollar is dying. How many things out there happening right now in the political world, just on our news streams, do you think are contrived to distract you? I think this whole movie that we're watching with the political prosecutions happening, I think that is a big distraction. I think it's all a setup to distract people from the financial crisis that's unfolding. In this article here, the Organic Prepper talks about what countries are dumping the dollar, and the list is growing here. Every few months, we see another nation jumping on board here. Started off with the BRICS nations. We have Brazil, Russia, India, China, and South Africa. But we've also got Argentina, Saudi Arabia, the UAE, and India jumping on board to trade outside of the dollar amongst one another. When you take all these countries together, their population is more than half of the globe's population, right? So this is big de-dollarization. This is not something where it's just a small portion of the globe here. And they've got a section in this recent article here, how to protect yourself. A lot of this we've talked about here many times, but I'm just going to read them off here because I like the way that they kind of worded these things here. Stock up on tangible goods like food, medicine, tools, other supplies that you'll need. Limit the amount of money you keep in each bank account. That's a good one because if the bank goes down, if the depositors are not rescued, and if FDIC may not even come through if you have less than $250,000, right? I'm not saying that that's definitely the case, but if you look at what they've admitted they have versus all the deposits that are out there, they have a fraction of what is needed to cover all the deposits. So even under $250,000, I would be spreading the risk there, diversifying where you keep your money, and of course keep out some outside of the banking system. And that's number 3 bullet point here, and how to protect yourself from this article here. Number 3, and consider investing in physical gold and silver to maintain the value of the extra money you have. Here's the hard part. I hear this all the time. A lot of people just don't have the extra money. Close to 70% of the population is living paycheck to paycheck. So to some people, buying silver is going to be maybe a missed meal. So that's the real hard part. And I hear that. Plus, I hear arguments against silver all the time. Oh, JJ, you can't eat silver. Why would you want silver? Well, you can't eat dollar bills. I mean, you can, but you better have a lot of water to wash them down with, because there's going to be some nasty, dirty money. So the fact that you can't eat silver, I mean, you can't eat a car, you can't eat a house, but these are things that people purchase. And homes typically go up in value. We've been seeing homes drop in value. Cars typically drop in value when you bought them. Over the past couple of years, though, we've seen rising prices even in used vehicles. There was even stories where people bought vehicles and sold them back to the same dealer 6 to 12 months later at a higher price than they paid for them. I mean, just crazy, insane times, here that things happening that we've never seen. And it's just beginning, because it's going to get even wilder and crazier as we progress here into the future. Reuters is out with the following report. Bank deposits edge up after record outflows. So a lot of people, they think the crisis is over. They think it's under control. So we're seeing this, inflow now after week of dropping deposits. And this is just a recent article here. The last week saw it actually an uptick in deposits, right? So people are, I think, falsely believing that this crisis is over, when I think all of us here know that it's actually just beginning, and it's going to get a lot worse. Corporate bankruptcies jumped in the first quarter. March had the highest monthly bankruptcy tally since July 2020, when the economy was in the initial throes of the health crisis. All right, so everywhere you look, things are going from bad to worse, as far as I can tell here. Also, back to sound money and silver. We've got JP Morgan out there. They control 53% of the precious metals contracts that are held by banks. And we already see this gap between the paper price, or the price you see when you look up the price of silver, on the internet, versus the physical price, right? It's hard to get an ounce of silver for less than 28, 29 bucks right now. And you look at the online price, there's a big separation, and it's going to get worse. Why? Because they're manipulating the price on the papers market with derivatives and contracts. But if you buy physical silver, you're fighting against that manipulation. So as the price gap widens between the digital price, what you see online, and the physical price, that's going to pull the mask off of the Joker, so to speak. And you want to be ahead of this because precious metals are going to be re-implemented into our monetary system. The price has been held down by banks. A lot of these same banks, including JP Morgan Chase and central banks, have been accumulating physical metals here, waiting for the day when the price is going to be unleashed and the manipulation is going to stop. So our world's going to change here, folks. So we got to be ready for it. We're going to try to keep you ahead of the curve here with all the latest news and analysis. Please let me know what you think down in comments. And again, please don't forget to like, subscribe to help this channel. Thank you all very much. Really appreciate you all. Bye for now, and peace.